let's take a look at the projections. This week, 153.7 was the noise band for the week. That's now left over. Let's take a look at the months. We're looking at 153.7. It's 50%, 153.79 here. That red bracket is 50% below the month open, the current February month open. Definitely will be tested. We want to be in the market, so this will definitely be tested, maybe even lower. 152, we're just looking at 152.7, and also maybe lower levels. We'll also make projections for the current correction, so that if we want to do a short, we can get into a very small short. If we don't want to do a short, we know the extension, how far it will take us. Remember the correction, that is. This is A, this is B, this is a leading diagonal. This is very volatile issue, can give you not only a shoulder, it will definitely give you a head, maybe same size, same magnitude of the head, maybe lower. You have to plan correctly for the trade position wise in order to be profitable and buy as low as possible. We'll have to do projections for the correction downwards, all right, and also buy limit entries at internal cycle levels of 1. So let's take a look now at the actual market picture. Whatever we're going to be looking at or showing today, we cannot expect to implement except next week for sterling yen. If we're long, of course, you're still long, you want to close out. We were closing out since yesterday. If you are not long, you may consider that we could go short, but again, that's going to be next week. So the only thing that's not going for this is that actually yen is weak and dollar is moving higher against yen. Alright, so we are looking at this projection now. There is some kind of momentum extreme. We're looking for a correction. So we know we have a 1, 2, and a 3. This is just a degree A. This is going to be another degree B, because what we are seeing on the 1 hour chart is still very positive. We have this 1 hour chart here. You're getting a 0 line bounce, yes, out of this, and it would mean this is your bounce level, 155.4. Market actually did 155.56. It would mean that if you're still long, you are going to be seeing 156.6. You're going to see another head because of this momentum strength. This is still doing an A and a B and a C at least. If you wanted to go long still, you could buy at 155.5, 155.43, even 155.3. Internals here are very meaningful now in this momentum plot. That's more internal. This is a 1, 2, a 3. This is a 4. Happens all the time, internally in all the cycles. Buy at 153.4 will take you again to another head, 156.4. So we're going to be doing these next week, because we don't want to be actually holding something so volatile on a corrective level across the weekend. We're just showing, expecting what, or at least showing what we expect to trade next week, short term. Again, this is still buys possible, so long as you're having this kind of momentum plot. We want to be on the right side of the market. Remember that we follow the flow. It goes the flow. So the flow is still up. Early next week, we could be buying 153.3. Takes you to another head. The swing trade, the primary swing trade, that would be just an intraday trade. The primary swing trade would relate to that we're seeing a head here. Bounce is valid at a neckline currently. A has topped out. This is A. That is probably 3 in A. Okay, so this may extend to have another 5 in A. It would still be level A, and that is just double heads, and we are going down to level B, but we'll make the most of the volatility. Alright, and the most of the volatility would mean that short term this can bounce at that level, 155.35. we buy this level,